Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that we had very strong previous monthly support at this level, preceding this rejection to the upside, which was then broken to the downside and retested exactly here. The market has in fact respected this level as resistance and started rejecting it to the downside. We can also notice how, as we had this impulse and correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we had 0.382, 50%, and 0.618 Fibonacci retracements, all lining up exactly inside of this area, which we did in fact expect this market to test and reject to the downside, which is exactly what this market is currently doing. Going down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that we just had the break below a quite significant structure level. In fact, from here, all this previous move to the upside was created. Now, this makes this level quite strong in this case, weekly demand and support. Now, when you have a demand and support area which gets broken to the downside, all that previous demand and support becomes supply and resistance. So what we could expect here is a move to the upside, a retest of this previous support and resistance, and then for this market to potentially continue lower. Now, the next downside target, by looking left, would be exactly this low. So what we could expect is a minor correction and then more bearish continuation for the market to reach this downside target exactly at this previous level of demand and support from which all this move to the upside got developed. Going down on the daily time frame, what do we see? Now, from a daily perspective, I did speak about AUDUSD a few days ago. After this impulse, I explained all the reasons for which we could expect this correction, and then from here, this move to the downside. Now, that is exactly what the market just gave us, and by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now, before we continue with our analysis from a technical perspective here on the daily time frame, let's first go and see what we have when it comes to the commitment of traders. Now, what is important to keep in mind by looking at this institutional data is that if we look at the data for the AUD, we're actually already looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that institutions with last reports on the AUD have been increasing their shorts from 88k up to 122k, decreasing the net positions from minus 43k to minus 53k. Now, this comes with 17,000 shorts added with the last report. Now, this is making AUDUSD weaker. And if we continue our analysis here on the daily time frame, we can also notice how we had this impulse and after the impulse breaking below this previous level of support, what we could expect is a potential correction and then more bearish continuation. Specifically, what we can also notice is that as we had the impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, showing us how we have a 50% and 0.618 Fibonacci retracements, which are lining up with this previous level of support, acting as support here and here, which is now turned resistance. Now, this creates confluence of resistance inside of this area, meaning that if the market will actually correct to this confluence of resistance zone, we have a good probability of seeing more potential institutional shorting inside of this area. Now, this would further increase the probabilities of seeing a potential reversal lower away from this zone in the case of a correction to the area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, as we have already checked, we can see how, as we already did, that is exactly what we would expect. We would expect inside of a confluence of resistance area, this shorting to continue, to see more shorts getting added, and at that point also potentially longs getting closed. Now, if the market will in fact correct to this area and we will see more institutional shorting and longs getting closed, at that point we would have good probabilities of seeing a potential move lower. So how we could be approaching a potential move lower? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see how there is still time to join before the offer expires and everything goes back to normal. And directly from here there is the button to join in order to gain automatically access with email and password that you will create during the checkout process. So I really suggest that you go and check it out at transparentfxtrading.com. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.